Welcome to Investago TV's weekly review, your essential source for global economic updates, keeping you informed on the latest market trends and financial insights every single week. Buckle up. The financial ties between Europe and the US remain strong despite talk of deglobalization and de-dollarization, with the dollar still being the dominant currency. The European Central Bank indicated a different approach than the Federal Reserve last year, but had to backtrack due to fears of imported inflation. Now, the challenge is that the Fed's pause in rate hikes might complicate the ECB's plan to raise rates, even as countries like Saudi Arabia, China and Russia opt for other currencies. The dollar's global dominance is barely impacted. The Fed's interest rate decisions can significantly impact the European economy. If the US enters a recession, it might cause difficulties for Europe, but could still simplify matters for the ECB. In a recent address, President Biden celebrated averting an economic crisis, citing the necessity of preventing potential catastrophe. Drawing parallels with the historic tale of Resolute, a British sailing ship rescued by American whalers and symbolically returned to England, the commentary suggests future generations may not remember the debt crisis averted in 2023. However, the ever-increasing US debt, predicted to rise from $31.4 trillion to $50 trillion by 2030, is expected to be a significant concern, with potential impact contingent on uncertain economic and market conditions. Japan's economy has expanded at a quicker pace than predicted, with an annualized 2.7% growth in the first quarter, exceeding initial forecasts. This development might influence Prime Minister Fumio Kishida's decisions regarding an early election. Despite concerns of a global economic slowdown, Japanese companies have demonstrated resilience through increased spending. However, a mismatch between production and demand remains a concern. Additionally, the economy's recovery may influence the Bank of Japan's policy decisions in a forthcoming meeting. Despite the optimism, Japan's economic output is still lower than pre-pandemic levels, indicating a need for sustained growth in the future. Facing the risk of deflation, China observes rapidly falling factory prices and stagnant consumer prices, marking a significant challenge for the world's second-largest economy. Economists fear that without inflationary pressure, China could fall into deflation unless the economy improves. Prolonged deflation hinders growth and can be hard to overcome. Experts suggest that Chinese policymakers might need to employ strategies such as reducing interest rates or offering spending incentives to households and businesses to counteract the risk. While the situation could be beneficial for the global economy due to reduced costs for importing Chinese goods, it poses a substantial threat to China's recovery. That's a wrap for today, and I'll catch you next week. Don't forget to follow us on our social media channels to stay updated. Wishing you continued success on your journey.